Morning, I'm Matt Cooper, analyst on the macro team here at Hedgeye. Welcome to the Macro Show for Wednesday, March 4th, 2026. Joined live in studio with Hedgeye CEO Keith McCullough. Keith, I'll pass it over to you.
Lots going on here. We were just talking about the younger generation of Hedgeye, and all of you, whether you're older or younger, it's a better way and it's a new way for old and young. So I'm lucky enough to have these young guns on my team, like Coop, and behind the camera you got Ethan, you got Marina over there, we even keep Gendron on the team, so he's over there. Lots going on here this morning. It's a team effort. Thank you for all the kind compliments. It's been a good week so far for the free week, I guess. A lot of people who've never seen us before.
Yeah, it's a good opportunity to show people what we're all about. And then people who have access but don't have full access, they can kind of see what it's like to have access to everything, which I think is great.
I mean, at a bare minimum, it's not like, Dan, you want our outlook on that, short Dan Ives. We have an ETF for that. Ives, thanks for coming up, buddy. We got that fully loaded. It is a very different experience in watching the clown show that has become CNBC. Top three things this morning in the notebook. Number one is going to be Asia. Number two, gold, and then volatility. So a whole bunch of people wake up this morning like a couple hours after we've done the work, that is. Don't forget that most of the work that I do comes from Coop, Rooster, our team that is delivering me the wood while I'm sleeping. Okay, so I get all these data and reports, options market reports in particular, after Bloomberg gets the new options in terms of settlement prices, et cetera. So that's what I do. Then I wake up and I see people like writing narratives about panic attacks. I mean, South Korea is just a beauty, right? I mean, you got this guy, Micro Marco, who's like, I told you on South Korea. Well, what would we have done with that, Marco? I mean, look at this thing. First of all, it's down 12% in a day, which is the biggest move ever for that market, I think, or at least certainly of the modern era. And it's just back to where it was a month ago. I mean, I think Marco's been saying that since like December. So you lost all your money and you had a good day. Nice job. And then he's like, you idiot, I'm going to block you. Go back to JP Morgan. This is where these people become famous. Micro Marco, Telecom Tom, all these guys. You know what they have in common? They never ran money. Yeah. But really interesting. I think Bitcoin's it's going to go 200,000, and we're going to do this. Like, if that's what you need, you have the disease of the mind that we all have, which is the need for certainty. There's nothing certain about a market that goes up 27% in a month and then drops 12. Okay, but there is certainty that you can risk manage. It's called probability. Okay, it's never certain. What I give you is not certainty. In fact, I give you the embrace of uncertainty. So again, what I'm trying to do is say, okay, look. I'm a seller of Japanese equities last week at the top end of the range, and now I get to be a buyer of Japanese equities at the low end of the range. I mean, Japan last week was up 3.6%, and last night it was down 3.6%. So you sell some last week, and you buy some this morning. That's what we're going to do, okay? Nice. That's the update in Asia. We're already short Indonesia, and I already sold all my India, so that's pretty much it. Long Japan, short Indonesia, and Indonesia was down more than Japan. Cool. Down 4.6%. Indonesia's been a cesspool. It's been phenomenal on the short side. IDX is the ETF for that. But again, what's also happening in Asia, don't forget, is that they don't have this thing. You know what the PPT is? You don't know what that is?
No.
Come on. The plunge protection team.
Oh.
Okay. Now, because you were as a younger man, I don't even know how old you were in 2008, but so. The U.S. has permission to do, like Scott Bessent, if you don't think that he's doing things with the U.S. balance sheet right now, intraday, you're dumb, okay? That's that. Now, the problem with these other countries is that they don't maraud as free market capitalists that'll let prices clear and then manipulate markets with a plunge protection team. Look it up, it's a thing. ChatGPT can tell you. I'd be interested to see what ask Claude, say, what is up with the PPT that Mucker's talking about here? Now, they don't have a PPT in Indonesia. That's great, right? Because markets have to trade, God forbid, on free market demand versus supply. This is a big thing. If Scott and I have another meeting, we used to have a bunch of them. I'm going to ask him about that, right? And I don't think he's going to want to talk about that. But again, you either believe in free market capitalism and free markets, or you do not. All right? You either believe that you need inside information to trade on markets, which a lot of people do in the elites. That's not Scott Bessent, obviously. It's a whole other kettle of fish. Or you do not. Right? We don't need any of that. We just need, the the hard-working man-made models that we use to build to front-run the machine. And that's it. Okay, that's your update on Asia. Secondly, on gold. Well done, okay? So you can see, actually this week, the most feedback we've had is that people can see portfolio solutions.
Yeah.
So they see the value in, like, this is what I'm doing in my retirement account today. Every day you get to see it, okay? So yesterday, what was I doing? I was buying gold, and I was buying it two different ways. I was buying physical and I was buying GLD. I was buying utilities, I was buying Norway. Okay, that's what I was buying, okay? Now, okay. That's it, that's all you need to know. Oh, but why don't you show me all that in real-time alerts for $30 a month? Are you out of your fucking mind? I mean, what if Steve Cohen gave you an opportunity to look at what he's doing every single day? Or Stan Druckenmiller, or anybody else? By the way, those guys are retired, so you're stuck with me. And you get to see what I'm doing every day. So if you want to know what I'm doing every day, there's a price for that. I think it's beyond a fair price. So that's what happened, and that's what we do, okay? This whole thing is one trade. Bond yields went up, why? Because the Hedgeye CPI Nowcast, I don't mind if you guys give that away for free this morning, you might as well. It's the best thing we got, or at least one of them. Next to Ethan behind the camera, we got the Hedgeye Monthly Inflation Nowcaster. So it's ticking up for the first time, and not inconsequentially, all right? After going down for 5 straight months, from 3.0, you can see that all the way down to 2.39%, which our model absolutely nailed. We get the first uptick for February, which will be reported pretty soon here in March. And then the March number we have going up a lot, up another 22 basis points from there. So the bond market's already figured that out. So if bond yields look like the shape of that curve, what did bond yields just do? Up. Did they go up like 22 basis points, Margaret? No. You get the point, right? If you don't know what a sine curve is yet, read my book, okay? If you don't need to read my book to understand a sine curve. But you do need to understand rates of change. Okay, so what happens, guys? Show the 4 quads. What happens when inflation, instead of going down, which means that we were in quad 1 Goldilocks. At the bottom of that curve, that was a January number, the 2.39%. Show that again. Go back and forth. Like, do a little, come on, just like they do in Squid Games, right? South Korean stock trading. There you go, back and forth. So you see that Goldilocks was when returns peaked for us being long of quad 1, which we bought throughout December and January. And then quad 1, again, go back to what is quad 1? It's when the inflation's going down, or it's quad 4, which is worse. And we do think at some point in the second quarter, you're going to start to get some quad 4 again. But again, for now, it's quad 3. Because inflation going up is either quad 2 or quad 3. So we say quad 3. And the market says quad 3. The entire market, currency market, bond market, sector styles in the equity market, high yield market, all say the same thing. All right, so you can't talk about gold without talking about all that, because what you're really talking about is bond yields. And then finally on the VIX, you can drive a truck through the risk range on that. Good luck, 17.99 to 26.41. So what's the first thing you do when things get volatile at the tables? Right? I mean, like, let's go to Vegas, and let's say a guy's up a bunch. Let's say he's up 50 grand. And then he starts to lose it. Gets hammered. He's got some yo-yo behind him. They're yelling, complaining, dealer's mad. And then a guy pulls out a gun. Should we stay at the table? That's called volatility, okay? So everything's fine until somebody pulls out a gun, okay? So this is what's going on. The gun went off. It went into the chop bucket. Guys, this is a good dial. I think Nate did this thing. We are going into the chop. You go from the investable bucket bleep, into the chop bucket. Guys, come on, give it to me. Give me that thing that you guys showed. You guys got it? No? The dial of volatility every day. It's in the
macro summary.
The macro summary chart number 2, I think, on the weekends, Genron. See, I was saying, Ethan, Genron's on a short leash over here. I mean, okay. Without Genron finding it until he finds it. You go from the chop bucket, the dial goes up, some intensity. Okay, now they're bombed. And the guns come out in the F bucket. Now look at what's going on here across asset class vol. I mean, the Russell Volatility Index is very close to going into the guns are really going off bucket, which is called the fuck bucket. Okay, so you see those yellow lights? If those go red, that'd be north of a 30 vol. That would be a major problem. Now, Scott Besson's going to need a bigger gun if the PPT wants to get engaged there. They've done what they did what they could and should do if that's what they believe in. I don't believe in doing that. I've already said my piece. But that's what they did. Okay, so here we are no matter where you go, and that's the problem. In 2008 they tried everything. They had their guy in there. They had the chief executive officer of Goldman Sachs was the head of the Treasury. Got to sell his stock tax free. Then you had the Bernanke. They got their guys in there, right? And they couldn't stop it. Even Warren Buffett couldn't stop it in October. But our signals got that right. So here you are, no matter where you go. Watch out with this VIX. What it does for me when it starts getting more volatile, what do? I do less. I do more waiting and watching. You can see that in real-time alerts. Oh, but I'm subscribing for free. I want to see more action. It's not about action. It's about having patience at the core of your process. When volatility changes in terms of a regime shift from the investable bucket to the chop bucket, that's a thing. That's the yellow lights. And then eventually, I'd be very surprised if this year we don't see an F bucket of volatility. Right? Those are your top three things. But I've been surprised in many things in my life. I was very surprised. My daughter turned 16 today, and she replied to me immediately. I was very surprised and happily surprised. I mean, if you cannot wake up to the element of surprise and adapt, you are fucked in this market, okay? That's a very technical term. The emergent mind. Do you have one? Right? What I wrote this morning was I would prefer to employ a colony of ants than a certain type of hedge fund analyst or their old wall boss, and certainly the sell side or anybody on CNBC. A colony of ants, okay? Why? Because the ants are rule-based and they get to the path, the correct path, called alpha, saving and making money, faster. They don't ask questions. They don't have valuation models. They don't go to conferences and stand around a bar and talk about, well, software is clearly overdone. I'm going to picking bottoms, right? Very stinky business. But the ants don't care. Think about the machine that way. We go through that this morning. Do you know, well, you already edited my early look, so you know. Mm-hmm. What is it called? Do you think the ants the ants are fractal? Nature's fractal. You think it's just totally random that ants are going to go onto that right path? No, there's a chemical. What's it called?
Pheromones. Yeah.
Pheromones.
Pheromones. Yeah.
Pheromones. Right. So if they were not aware, for example, the ants secrete pheromones and tend to follow the strongest pheromone trail. They would be unable to develop mechanicalistically, where to go. The machine is a series of zeros and ones. Pheromones. Find those pheromones. If you're an old wall person and you refuse to evolve, you've lost your hedge fund. We know that. You now run a family office. You're mad at me all the time, which isn't productive. You got a whole host of issues, and one of them is not being able to make money in this market anymore. It's probably the biggest one that pisses you off about the other two. Nobody wants to lose their business and their mind. But if you could, you would. You would adapt to, on the one hand, you believe in AI, on the other hand, you won't adapt what you're doing every day? Or you worse, employ a manager? A dude in Woodbridge, Connecticut running a registered investment advisor who puts you in growth stocks, like software stocks? What are you, a fucking idiot? Come on, wake up, bang, bang. That's why we're up. Ask these people. Even some of the most basic things that we talk about before we make a decision, they won't have a clue. What are you doing? Oh, because that's all. Yeah, because it's the way it's always been. And every once in a while, a quad 4 hits, and you lose 20, 30, 50. If you're a crypto cat, 80% of your hard-earned capital. Don't do that. Don't do that. Don't do that to yourself. You don't need to anymore. Right? We're not going to show the show for free every day, Coop. But I'm going to make sure people know. S&P 500 risk range. This thing has come down. So again, the riskiest setup is when you break trade and trend after you signal lower highs in something. Lower highs, medium-term trade breakdown, S&P has both. Will it break trend today? Who knows? Looks like on the open, no. What if you did what you did on the open on Monday? You sold stocks. They closed up on the day. What if you decided, okay, after that, I'm going to do don't worry about where the futures are. Worry about where the risk range is, okay? Make good decisions inside of the risk range, and you're going to do a hell of a lot better than your former self. This number is way down now, 68.99. That's called a big lower high. So we got that. That's bad. We have a medium-term trade breakdown for the S&P 500, which is above that level. And trend is an open question. Trend today for the S&P 500 is 68.02. As the price, volume, and volatility data changes, the trade trend and tail levels change. Now, I did give this a sneak peek. I popped it on Twitter last night. Genron's going to find it. The trade and trend levels we publish for everything. Again, for a price at the institutional and macro pro level. So it's a big dashboard, and it shows you where are the trend and tail levels for everything that ticks. Now, here we're just showing the dollar. So the dollar currently is bullish. If you see that UUP thing, see how it says that the current status is the price is above. Okay, so again, so that's a thing, right? When the dollar breaks out, you better cover your dollar short. That's what we did last week, right on time. I had a bad day yesterday because I was still long some emerging market stuff that doesn't like when the dollar goes vertical on the day. I got over it. I was long gold and emerging markets. Now gold's up. Okay, whatever. I mean, I'm not going to say whatever. It was one of the worst days I've had in 3 months. In my long short book, I was down 29 basis points. For me, that's a lot, right? 2 days ago, I was making all-time highs. So it's not so bad, right? I'll get over it, right? My daughter still texts me back. My wife still likes me. And it has nothing to do with my performance, okay? That ship has sailed, okay? What happens every single day is that it's either validating if you're set up to make the next move right. That's why I was very quick to move some capital out of certain things. High yield, I had a little bit left. That was gone, the last 3% of it. And I put it into Norway. Nobody on Wall Street's going to tell you to do that because they don't know how to do that. It's not that they can't, it's that they don't know how to. They don't have confidence in the process to do so. The people that are winning on Wall Street are those who even work inside of Morgan Stanley, the Merrill Lynch, wherever, and they're just like, I'm just going to do it different than all these other people in the room. I'm just going to copy Hedgeye. Yeah, that's how you do it. Well done. The claim used to be too much transaction cost, too much, what's your turnover? Who the fuck cares? Pay the taxes. Turn it over so you don't lose it. That's the point, right? Okay? We don't draw down. That's the number one thing to take away going back to 2008 for Hedgeye. We've called every single stock market crash since 2008, and while that sounds ridiculous because nobody on TV can say that, it's ridiculous. It's ridiculously cool. It's awesome. Nobody cares. Work harder. What else we got going on for you this morning? Already in on the volatility across the board. Sectors, it was a mess, 10 out of 11. I was buying basic materials yesterday. I was buying utilities. What were you doing? Oh, you didn't see that in Portfolio Solutions into the close. Well, that's because basic materials didn't get to the low end of the range into the close. So now you're going to see that position go up this morning. See how that worked? Imagine you had a plug right into my thick hockey head, and you would get every single transaction, every single, you know how many trades I had yesterday? Let's just look it up. Timestamp every bloody thing that's ever happened. I might as well do that. You know how many transactions I have in a day that I'd have to show you? Yesterday I had, take a guess.
Throughout the whole day, I would go like 20?
49.
That's, yeah.
Busy day. Busy day. All right, so there's that. What else we got going on for you this morning? Again, you can see my portfolio once a day, having touched it by 11 o'clock. That's usually when it comes out. I do make some changes sometimes into the close, more or less. They're irrelevant. Other than that one, I just got to say it because a subscriber would be like, you didn't tell me that. Dude, it says long XLB. If you don't see it near the low end of the range, well, I guess you don't have the low end of the range, but I do. So that's it, all right? So you should be buying more of things when they're down consequentially relative to where they've been all the time. That's called investing incrementally. I think they call it dollar cost averaging. That's bullshit too. What else we got going on for you this morning? We got the MOVE Index. Again, call your local RIA. Say where's Treasury bond volatility today? That would be saying like where is the gas gauge on your car? To me. Do you think I'd make a decision in equities without knowing what the bond market's signaling? Do you think I'd get in the car without knowing if I have the right, if my tires aren't flat and I have gas? Two different things. Come on, get better. So simple, right? I mean, I think I'm really just I think I'm hitting my stride at 51 years old, really. Like, I'm patting myself on the back, but furiously at this point. Like, just telling you the most common sense things I should have been able to articulate it far longer ago. But it's just that I'm not as smart as these people on TV that it took me a while. Also took a lot of evidence to show you that our process works a lot better, which includes measuring and mapping that. So a big part of that, by the way, so if you look at the MOVE index, it has a trade and trend level too. Immediate term trade breakout, as I told you before, was 67. Like a hot minute, it went to 78. Trend is 79. So what I'd expect to have happen here is that bond yields start to decline, okay? Bond yields go down from the top end of the range, and that starts to tone down a bit. We'll have to see. And if it doesn't, then it doesn't. Then buying bonds is a little riskier than what I thought, okay? But that's what I think. If the trend doesn't change, I'm going to buy the damn dip in TLT. Okay, what else we got in utilities? That was great yesterday. What else we got going on for you this morning? Tier 1 alpha data just knocking it down. People are panicked. Our primary measurement for that is called short-dated calendar vol, which went from 18 to 24 in a day. That typically stops going up in the high 20s, and then the market will bounce, and then it'll drop back down into the teens. Looks like that could happen in the first hour of trading. So get ready. What else we got? We still have negative gamma. We still have the flip line is 69.18, so well below that. 1 month vol is still above 3 month. That's a big risk signal, like risky, not this vernacular that Wall Street says, risk on. Is it a risk on environment? Riskier, okay? It's rate of change. And then on the impact table, two of the biggest stocks yesterday that impacted the S&P to the positive side would be two stocks that I would short on strength near the top end of the range. We publish it for Microsoft. We don't for JP Morgan. JP Morgan is a very dangerous looking stock on our trade trend tail signal, just FYI, and that's not new. We do remain short of the XLF, which has JP Morgan as a primary component in it. What else? Asia, I already hit on that broadly, so that saves me some time. Middle East. Did I get out of Dubai? I was never there. How about United Arab Emirates? Sold the whole fucking thing yesterday. Replaced it with what? Norway. So, to review, why were you long? That was my biggest mistake so far this year. I had a discussion like I do every night. I pray before I go to bed. I'm like, to God, I'm like, I screwed that up. I pray that I don't have a screw up like that again. He's like, it's okay, buddy. You bought Norway. It's an oil exposure too. That's why I bought UAE. At the time that I was buying UAE, it was signaling oversold. Little did I know that World War III was going to potentially start. The market got it right. The market's always got it right. But Norway wasn't letting me in because oil just kept going up, and I'm long oil too. Now Norway is up over 7% in the last month, fully loaded with World War III not happening, because it didn't. This other thing happened, obviously. So that's what we did. It's an oil exposure, just a ticker, right? It's not like I've never been to either country, but I'm no longer long of one, and I'm long of something else. What else we got going on for you? Israel's up again this morning. That's phenomenal. Been a huge position for us. Turkey finally bouncing a full % there. It held trend. That's why I held it. What else we got going on? I already said my piece on oil. Top end of the range, 77.04. Gold's good. Copper's good. Again, copper's less good than gold. I was buying platinum instead of copper yesterday into the close, and that's up 4.5%. So that'll pay some bills. Or buy some pizzas. Maybe I'll buy if Brunswick's hockey team wins the playoffs today against Thayer. I can buy them pizzas.
There we go.
Little pizzas. Afford some pizzas. Today's going to be a good day for Precious. Precious affords you more pizzas. It's been a great run for us since we started buying gold back in February of last year. Bond yields risk ranges mathematically, which means literally in my world, didn't even change. The 10-year yield is the exact same range as it was yesterday. Think about that. I'm thinking about that. And then finally, Bitcoin. Just went bullish trade. The bros, wake them up. Go knock on their trailers. It's time. Hank, the market tank. You can do it, right? Come on, stop it. Anyway, immediate term trade is 71,000. 71,016 or something like that. It changes all the time. So why did it go from 69 to 71, 72? What is it at right now?
71,665.
Well, these guys know because they're both probably long it. These two these two younger guys, right? They're all long it. They were told that you never sell it. Then I came along and I said, "What are you, an idiot? Like, you don't want to risk manage?" There's never been a market price in the history of markets that shouldn't be risk managed. So Bitcoin, let me just do it quickly. It's the opposite of this. So now it's got a big higher low, barely. The risk range is higher than the prior closing low of 62,800 and change. Okay, that's good. Trade has to hold above 71K. Okay? Currently, by a nostril hair, it is doing that. But it's also right at the top end of the range. This is where Hank the market tank runs into some problems, right? Because this is typically not the price to be buying after it goes there. The price to buy is at the low end of its range, which is now 63,000 and change. The trend is 81,000. Right? You know what I'm going to do with that? Nothing. I'm not going to drink a case of beer and do Hank the market tank. Nope. Let them do that. They'll tweet all day about it.
Yep. Wait and watch, right? So, I mean, since
the first thing you should do is be less aggressive with shorts when that happens.
Yeah, right.
Because don't forget, we're short. We've been short Bitcoin and Bitcoin equities.
Yeah.
And by the way, that basket was down over 6% yesterday. It was a great day to be covering block and all these different things that I'm short. MSTY. But down to the minimums. That's what you do on down days sometimes. So, monitoring it.
Yeah.
I'll be very slow to add. I don't add shorts if this thing holds above 71,000, I'm not adding to the short side. That's the first decision. Mm-hmm. If this starts to come in play, I will cover all the shorts and get long. Oh, yeah. Then I'll come up with some bullshit that they all come up with on why it should go moon.
I know that'll get a lot of people pretty excited. But it's a progression, right? You cover your shorts first, and then you continue to wait and watch, and then you get long. It's not like you just flip completely. And,
now, guys, can you show our track record, Gendron, this morning? Can you show the track record? It's in the crypto tracker at the top of the page. That's every day. Like, I mean, this is how well we've done with this one. And patience is key. So I was on a podcast called The Milk Road. Look it up. It was a macro discussion, but he's definitely got his talons into the crypto and the Bitcoin. But see that picture there, that the red is where we're out of it or short it, the green is when we're long it, which that's pretty good. That's as good as I can do. The Milk Road conversation eventually went to, Keith, what do you think about like the long term on Ethereum, like tokenization, blah 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 blah. I'm like, you know what, man? When it's bearish trend, I don't believe any of it. And when it's bullish trend, sounds great.
Yeah.
And he started laughing. I'm like, why can't people just like get there? Here is an asset class that had their version of Jesus Christ was a fraud, right? You can say whatever you want about JC. I'm not going to believe you. But believe me, Sam Bankman-Fried was a fraud, and he's in jail. I don't know, the Pompliano, like he might as well have been licking the guy's earlobes. I mean, these are like Ross Sorkin on CNBC fawning on him. I mean, there is a lot that's happened here that isn't true, okay? The only truth I have is that signal. If it's bullish, yeah, that could be the future. And if it's not, I don't believe you. So today, somewhere in between.
Well, I guess that's the point, right? You're just going to own it on the way up, whether you believe in it or not, and you're going to short it on the way down.
Yeah.
Yeah, it's kind of the...
And by the way, Bitcoin's the only one of the majors. Bitcoin's different than crypto, to be clear. I have some people like, he doesn't even know. Well, we like to know. Oh, great. You don't even know what the fucking move index is, asshole. But anyway, I don't know anything. I'm just telling you that Avalanche, Solana, Ethereum are not bullish trade. They're not above these levels here today. So one of these things is not like the other, and there is a government headline that got it there, and all those guys are trying to get out and pump something to you so that they can dump it on you. So just be careful.
Yeah. So, I mean, since it's free week, and hopefully we're going to have people, realize that they want to have access to all these things, and maybe they just have a couple of things right now, and now they have full access. What would be, for the people who, maybe they did get out of the S&P 500 or Qs because, things are kind of signaling pretty bearish on that front, especially. Like, what would be some things to look out for in the next couple of, weeks or months with your positioning that would, kind of signal that for people to like get back into like, domestic equities or
Right, I just look at what I'm adding,
Yeah.
right? Like, the one thing you can bet on, right? Love me or hate me or somewhere in between. The one thing you're going to know is when I get out of something and when I get into something. Because we send out an update, not just through Portfolio Solutions, but ETF Pro, which is a ridiculously low price, every day. So that's the signal. It's not, let's get Keith on TV. I mean, when they asked me, when this guy, Tricky Nick Dunn, told me, hey, don't you want to be famous? I'm like, almost puked in my mouth. I mean, this CNBC guy. I'm like, I don't want to fucking be famous. I want to make money. Like, I want to do my job. You guys, you got all these buffoons out here. Like, wow, we got, anyway, that didn't end well. And that's why. Because it's a lie. I don't need to be famous, and I don't need to live a lie to be famous. What I need to do is execute. So if you look at, just for example, like what are the things that I've added most recently? I mean, everybody loves the things that I get right, but they don't always love to buy them when I initially buy them. Why? What do we do? Like, I don't know about the love and the hate, but come on. I mean, this is not that complicated. The last things that I've added, yesterday I bought that. I was waiting for a pullback, had a huge pullback on it. I already said that I bought that. I sold all my UAE and swapped into that, straight up, 2% positions in each. And I've been buying the crap, very technical term, out of this, TLT. I wasn't long duration for the last while that you shouldn't have been. Now I am. And I also said I bought XLB. This is the fourth last thing I bought, the third last thing, second, first. So again, it's last in, isn't first out. What you do find actually is if I buy something that's trying to that has gone bullish trend, in the case of Treasuries, that if it gets stopped out like housing did, it went bullish trend, then it broke trend yesterday, just stopped out, bought more Treasuries. Oh, you can't do that. Yes, if you have an advisor who says that they can't do that, believe them. They don't know what the fuck they're doing. Okay. It's like watching men's league hockey. Or worse, a hockey parent who doesn't even play men's league hockey but can tell you everything about their kid who's playing hockey and they can't even skate. Okay? So get over it. Because it's all about yourself. If you could just say, I'm indifferent. I'm going to own, Mucker's going to own, at max, 30 tickers in his retirement account, and currently I have 25. And those are 4 of them, and those are the 4 newest ones. And the 4 oldest ones? Do we need to go there? It'd be like showing off, so I won't. But you can go back, and one of the oldest positions I have is AAAU, which most retirement accounts don't own AAAU. What's AAAU?
Physical gold.
Yeah. SLV?
Silver, yeah.
Yeah.
Done pretty well for.
That's all right. GDX?
Yeah.
Yeah. Oh, it's all the same thing. Yeah, you buy them at the same time. Just like you buy, these are really telling you quad 3. This is a quad 3 book. This is an inflation piece. This is a stagflation piece. This is an outright inflation piece. And this is a growth slowing quad 3 stagflation piece. That's what that is. You get pieces. Think of it like the All Blacks might, or great teams. I mean the best. Because that's all I care about. I don't care about how much money I make. I want to be the best, though. I want my team to be the best. When I die, I want to say that team was awesome. They never, ever missed a market crash. Because we haven't. We remain undefeated on that front, and I'm very proud of it. But to do that, you have to have a big team, a growing team of players who can play. Matt Cooper, would have been for almost 2 years now?
Mm-hmm. Yep.
2 years ago, didn't know shit from Shinola, okay? He might have thought he did, but he doesn't know what he knows now. Is that an accurate statement?
100%, yeah.
Do you learn every day?
Every day, yeah.
Yeah. So I can put him in any game now and be comfortable with it. And at some point, if I get, if McGough, keeps annoying me, I'll just take him out and put Coop in. No, but think of tickers that way. We're not going to do that with our players, but think of tickers that way. Okay, look, I have 3 strikers that I could put on the field right now. If you're a football fan, European football fan, or if you commonly call it soccer, and you're from Canada, we're pretty good at soccer now. Got caught cheating in the Olympics. Anyway, if you're not cheating, you have 3 strikers. That one's supposed to be performing, but all of a sudden it starts to break down. It's got a hamstring problem, it appears. Why aren't you quick to switch? politics, you're having an affair with the player. I don't know what it is, but very easy for me. They're not relationships. Switch. You're out, you're in. That's what these tickers should be. Wall Street's taught you that that's a bunch of things. They're saying that they can't do it because they can't. That's ultimately the answer, right? And or they don't get paid fees on doing it the way that I do. And that's it.
Yep. Well, I know we're a little bit over time, but good place to wrap it up. I thought that was hopefully helpful for everybody, and we'll be back at it tomorrow at 9 a.m.